Rising consumer debt has driven the number of bankruptcy and consumer proposals in Canada to more than 120,000 per year. However, within that number, an estimated 30,000 of Canada's poorest are overpaying for their bankruptcies. These are the country's lowest income earners that have no assets to sell. On average, these overpayments amount to $350 per person. In other words, up to $10 million a year coming from some of the most vulnerable in our society who file for bankruptcy. These overpayments are presently going to creditors, government levies, and trustee practices. In the majority of cases, trustee fees are taken from the debtor's estate, money that comes from the sale of assets or tax refunds. But for the 30,000 low-income Canadians who cannot pay the fees, a bankruptcy trustee asks for the fees up front in the form of a fee guarantee. These payments inflate the value of the estate and result in higher payments to creditors, government regulators, and the trustees themselves. The Office of the Superintendent of Bankruptcy, the OSB, has established guidelines that regulate 1,100 licensed bankruptcy trustees. The guidelines helped ensure that the trustees, creditors, and the government levies are paid. Where the system is breaking down is for the poorest bankrupts that end up paying more than they need to pay. Personal Bankruptcy Canada has developed a new standard of practicing personal bankruptcy in Canada. It's called F.A.I.R practice: financial transparency, accountability, impartial advice, and respect for the debtor. We want to ensure that the industry protects the financially vulnerable, to do what's right for those who desperately need the fresh start the legislation promises.